it take to get December corn back above $5? And what about November beans over 14? AgDay's Michelle Rook talks that through with DuWayne Bosse in Markets Now.
Welcome to Markets Now. I'm Michelle Rook along with DuWayne Bosse with Bolt Marketing. And DuWayne, let's talk about the soybean market. We've tried to get above the $14. Been tough to stay above it. What's it going to take there?
Yeah, we had a nice rally off of the Pro Farmer Crop Tour results, finding a little bit lower yield than anticipated. That got us above 14 in a hot, dry forecast, and you feel like we can keep going right. But no, the market kind of ran out of that bullish news. And I think to keep going above 14, we need confirmation that this U.S. crop is getting smaller, not just producers saying it's happening. I think we need USDA to come out and print a lower number, and then that ending stock would probably shrink, and that would get us to go a little bit more above this $14 mark.
So does it have to be sub 50, or what are you thinking?
Yeah, I think it does have to be sub 50 because USDA is pretty good at changing that residual side of the demand ledger to keep it above 200 for an ending stock. So I think you got to get that yield below 50 and maybe see this export demand continue to stay strong, because we are starting way behind the normal pace. So we got to see those same daily sales announcements. We got to see the big weekly sales continuing. And remember, as tight as the ending stock may look for the new crop balance sheet, you're not going to run out of supplies at harvest, right? So the seasonal tendency for the market to go down and make a harvest low for the price is pretty strong and something to be aware of. That's why it's so hard to stay above $14 this time of year.
And what's it going to take to get corn back above $5?
I really don't know. That's really sad and bearish of me, but let me try to explain. When it comes to the corn market, we could talk supply and say that the yield is dropping. This hot forecast is causing lower test weights and lower bushels. The problem with that is any production decreases you see USDA make, I think they're going to go on the other side of the ledger and just cut demand the exact same. You've got some guys in the industry, and I'm pretty close to one of them, saying that demand could be cut as much as 700 million bushels off this. High prices ration demand, and that's what we've had the last 3 years. So any cuts on the production side will get offset. So to answer your question, I don't see a way we get back above $5 until we make harvest lows and find some more demand.
Thanks for joining us. As always, DuWayne Bosse with Bolt Marketing. That's Markets Now, and we'll have more AgDay coming up.
For marketing advice, call Bolt Marketing, a futures and options brokerage firm.